All right. Good evening, everybody. Can you guys hear me okay? Sound is good? For everyone out there, it is bad luck to not say hello to your, what am I in this case? I'm not the trader, I am the presenter. I'm the presenter. I don't know, sometimes I do these, and I've been saying a lot lately, and I think this is just, going to be one of the best little presentations I've ever done. Of course, that's only in my mind. In your mind, it may be totally different. Understand there are a lot of you that attend these from varying degrees. You could be just kind of fairly new to the whole concept of wanting to trade or invest for yourself. You ran across me somewhere. You're tuning in. After 10 minutes, you may think I'm some kind of a nut job and just tune out. I'd understand that. Some of you have been around a long time and maybe really appreciate some of the stuff I have to say. These are educational little events. Those of you that are here know that I don't spend more than about 30 seconds telling you anything else except educational stuff. The theme tonight, I think, is a very good one. Oh, let me start off with this. I don't know why, but we are getting just a lot of like brand new people that are becoming members here that I've never heard of before, or are just coming out of nowhere. So for some of you, let me just quickly say hi. I'm Paul Lange. I've been a trader and well, I've been a trader for about 20 years and an educator for the majority of that time, 18, 19 years, which gives me a unique perspective because it is, I'm in the trenches every day doing this, both long term, I like, and also day trading. And I am, just so you know me, as a day trader, I'm not like a hyperactive scalper. There's nothing wrong with that. People can do that. Last week I averaged about 4 trades a day. Yesterday I did four. Today I doubled that, and which wasn't a good thing to be doing. But I don't get hyperactive, and I usually just only trade actively the first hour, and then kind of chill the rest of the day. And usually just maybe do one more thing, but usually after 11 o'clock, I'm not spending more than 30 minutes on the screen the rest of the day, and sometimes nothing at all. It depends what's going on. So if you have this view of day trading as being something where you have a pot under your chair and you don't leave the screen and your blood pressure is going up 20 points every hour, that's not at all what I do. I think day trading is a great time frame to be on. And again, then the other extreme that I like to do is long-term trading, investing, where you're kind of going off weekly charts. And my definition of long-term is I don't need to look at it in the morning. I don't care about it. In other words, it's not interfering with my day trading at all. I have I think, been able to give a unique perspective to helping people understand this. And that kind of gets to the theme of today. The theme of today, and I've had this theme for a while. I think one of the things that really stops people from doing this well is partly a concept of, what do you do to make money in the market? Because, if you listen around, there will be some debate about that. And how do you go out making money for yourself in your way that you can make money that makes sense, and what really works and what doesn't, and how do you do it? I think the theme today, it's not that learning technical analysis is hard. And by the way, there is only one way to make money for anybody listening to me, and I'll say 99.99%, and that's probably a very real percentage. For 99.9% of you, the only way to make money is technical analysis. There is no other way consistently to do it, period. If you want to challenge me on that, feel free. By the way, for those of you that are new, if you want to email me and let me know what you thought of today, that'd be great. If you've been around a while and you have some insight, please don't be afraid to email me. But the theme today, it's not that technical analysis is really hard to learn. I think the biggest problem is what people do with the technical analysis. Number one, they never learn it well enough. And number two, they don't trust it. In other words, they always just kind of keep it as an ancillary thing out there to kind of look to or confirm or not confirm or whatever you do with it, rather than just getting to really understand it and trust it 100%. This is what I do. I'm 110% technical. Why? Because after 20 years of being in the trenches, I know that's the only thing that works. Period. And it works. And it works very well if you know exactly what it's supposed to do for you. I'm going to teach you some stuff tonight. I don't want to put that the wrong way. Some of you maybe could teach me some things, but for a good part of you, I want to teach you a couple of things tonight. And I want to walk you through it. It's going to kind of be a two-part process, but I'm actually going to kind of teach you a strategy in a sense. I have to stop at a certain point, but I'll tell you, well, trust is an issue. Well, Carmen, if you want to, I think maybe never mind. I was going to make another funny comment, but only I would have thought it was funny. So let's kind of get rolling here. I do have a lot to cover. I'm already 7 minutes into it. Discussion points, don't even worry about those. You saw that in the email. You can read those if you want to, not to worry about it. First, I want to warm up to this issue. And the concept tonight is strategy versus speculation. What is speculation? What is strategy? What does it mean to have a strategy? And then teach you a strategy, so to speak. I kind of got started, I have literally, no matter how many of these I do, I have a list of future topics that are not repeating for 2 years now. And I have this list. And you know what? I went to look at that list and I didn't use any of them. You know why? Because I saw something that just triggered me down a road. And this happened 2 days ago. And I just sat there and I kept a little Word doc open on my desktop during the day. I just kept throwing notes into it and throwing notes. And I started thinking, boy, this is really good. This is great, to get a point across to people. And I didn't throw the slides together until today. I was sitting here at the desk all day. And what started the whole thing down this road was this right here. This is an email I received. And you know, it doesn't matter at all from who. You get the same email from zillions of people. And I'm on some of the email lists. I like to see what people are saying. I'm talking about other people that teach it, whether it's fundamental or technical analysis, whatever it is. But I want you to read this, and I want you to get some comments. I want you guys to be real active tonight and give me some comments on some of this stuff. You're supposed to attend this event, blah, 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 to learn how elite traders and they list a whole bunch of names of people, and others are adapting their strategies for today's market conditions and discover the specific trading opportunities they've identified in blah, 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 blah. What do you think of that comment? Can I get some of your comments real quick? Can I get a half dozen comments? What do you think of those? What do you think of that? Remember, for those of you that don't know me, I started DTS, my own company, 2 years ago, almost 2 years ago. Excuse me, in August it'll be 2 years. Before that, I was with another big company. It was actually considered to be at one point, it was the biggest company out there by far for many years. So I am quite familiar with the inside trek, if you will, with a big company that does this and what the motivations are and all that good stuff. And there's nothing, I'm not bad mouthing, nothing wrong with it. There's businesses and people do what they do in business, but I'm not a business. I am, but I'm not. I really enjoy showing people how to do this, and that's what my motivation is. So I like to call out some things that are what I consider to be not good things. They've made one way theirs. Sounds like the big alligator signal fishing. Well, forget about, I'm not even talking about the sales part of it. What about the concept? What I first want to get was, what about the concept of needing to change your strategies to today's market conditions? That's what I wanted you to address first. Eric, thank you. I totally agree with that. As a matter of fact, I'm offended by that comment, right? Really think about this, especially for those of you that are new, you may not quite get this. It doesn't matter. Don't worry about it. This is not the thrust of today's presentation. If you're bored already, please hang around at least till 5:20. Then if you're bored, you may leave. But this is just kind of an ancillary point. But it's almost offensive to me. Yeah, I know, but Davis, forget about the sales part. Yeah, there's a sales aspect, and I'll briefly touch on that. But what about this legitimate concept that you need to relearn your strategies from time to time? Yeah, right, guys, exactly. If you really understand technical analysis, if you are purely a technical person, nothing ever changes. Don't say nothing, put it in quotes. Yeah, the little teeny nuances, and I even teach it in my class. I'll say there's a little nuance, but you don't learn new strategies. There's no such thing. It's just not the same, right? Little nuances change. As bull markets or bear markets go from new to extended, different strategies may work better, but that's already evidence in the charts that you use in your strategy. In other words, think about this. Just for an example, as an example, you may notice that big gap ups do not get bought as much as early as an extended bull market. In other words, the big gap up in an early new bull market, they may get bought more than an extended bull market, right? But is that really needing to readjust a strategy? Isn't that just reading the necessary elements of your original strategy? In other words, doesn't your rating of the gap include the weekly chart and the overall move? It should. Do you see what I'm saying, everybody? A purely technical person understands what they're doing. the strategy just self-adjusts to what's going on because we are looking at all the charts all the time. So whatever is happening, right? Even if HFTs come into the market and start playing havoc intraday, you know what? We see that on the charts. Even if algos come in, and Jerry, that's so old it's not even a thing anymore. It happens occasionally, but you see it on the chart and you adjust to it every day. That's why I teach a thing, which I didn't do one time today properly, but where I teach a thing about how you enter and how you stop something so that you don't get caught by the machines, as people say. Because all that is teachable. All that is there in the chart in front of you, right? There is no concept to me. And I'm not meaning to try to pick on any. I mean, a lot of people do this thing, will relearn the strategies. But you know what? That's the other part of it too. It's like if you are a person who's taken technical classes, right? The odds are you're struggling. That's just what the simple odds are, I hate to tell you. And whatever company is saying this has the desire to sell more classes, right? So what a perfect combination. Here we have a person who is struggling and we have a company that's saying, well, here's what you have to do is that all that stuff you learned, that's for the old market. We're in a new market. Come learn the new strategies. I'm sorry, there's no need to do that. It defies the very concept of technical analysis. What is technical analysis? Is looking at a chart and understanding the flow of supply and demand, right? Does that ever change? Everybody, even if you're new, does that ever change? If you're reading the flow of supply and demand, if you're reading the flow of supply and demand, does the concept that you read a chart by looking at the flow of supply and demand ever change? That's what I'm saying. Naturally, the flow of supply and demand changes, we change with that, but the concept of reading a chart and understanding the supply and the flow of supply and demand is what we read. That concept never ever changes. Period. Period. Here's what I do to make this point further, which kind of leads into the topic for tonight, which is strategy versus speculation. Here's what I do. See this green bar here? Let me ask you just quickly first, and I don't like to try and catch people or what do you do with that green bar when it breaks across the blue line? I'm only showing you one chart, so there's only a wrong answer to this question. You don't know the right answer. But what do you do? What do you do with that right here? See this blue line? Boom. We go flying across there with a wide range bar. What do we do with that? And the reason I'm doing this is because I want to, everything I say, again, I'm in the trenches every day. Everything I do comes from an understanding of the charts and markets and what's going on. I don't just make stuff up. So everything I say, I want to back it up, right? Good, yeah. Well, the first thing I want to make sure is that nobody would ever go long there, okay? That is never acceptable. I don't care what the rest of the charts are. This is an hourly chart. This is a 60-minute chart. I don't care what, you can draw any other charts you want, daily, weekly, 5-minute. There is no concept in the world that you would ever go long here. I'm not going to explain why, I just want to make sure that's crystal clear. But what I actually can do when you see the other charts is to actually short this. And I'll show you why, because here's the other charts. And again, this is not like the strategy teaching part, so don't worry about this. But this was the daily chart. And you'll see what I'm getting. This is the daily chart, right? So we have this downtrending, but sideways daily. And you saw the hourly, that was back here. Here's the hourly running up, and this topping tail here is this topping tail right here. Everybody see where I am? And then that day when it ran up, here's the 5-minute chart. See, this is what I do, is to look for stuff like this, because I know, I think it says it on the next slide. I did all these slides this afternoon, so I don't exactly have them memorized. Because I know that that is going to get selling. And again, I want you to follow my flow. My flow is simply saying that this is what technical means. In other words, I know there's going to be huge odds when that happens. This was a trade that I did yesterday, a couple days ago, whatever it was, on M. So I'm not just, and again, anytime I show you someone say this is what happens, I like to, if possible, have it be something that I did in a trade. So you can see it's not just, oh, gee, anybody can look at a chart after the fact. Um, Somebody in the room? Who's in the room? Do you remember M? It was from 2, 3 days ago. Remember this, right? Favorite trade that morning, 10 o'clock reversal time. Cosmo, okay, took it with me. Thank you, guys. Thank you. And I'm not doing this to brag. I'm just saying there's, the majority of people aren't in the room with you, and they maybe think I'm just making this stuff up. So we're sitting there watching this rally up, and this is one of the number one watches. At 10 o'clock reversal time, rallies into here, boom, boom, boom. Be the tail entry, remember, blah, blah, blah. Works out nice. Now, I'm not here to tell you every trade works. That's not my point. The point is that technical analysis is this. It is what drives the market, period. There is no debate about it anymore in my mind. We can have it someday if you want, but there's nothing to discuss. Technical analysis is the balance between supply and demand. The play on M hasn't changed since the War of 1812, somewhere around then. It might have been a couple years before that, after. As Cosmo knows. Cosmo, when was this last in place? 1812, 1810, something like that. The other thing that doesn't change is that if you're struggling and you take some technical analysis array, the next thing to do is to tell you that everything is to be relearned, it's all changed, today's market, blah, blah, blah. If you understand technical analysis, nothing changes. I agree there's little nuances, but you never relearn new concepts. I knew the odds were good. There would be more selling than buying up there. Okay, and that's the key. Everywhere on the chart, you can come up with a reason why there'll be buyers and why there'll be sellers. As a matter of fact, for every move on the chart, what I always say when I teach is there's 4 groups of people. There's people that want to buy the stock. There's people that want to sell the stock. What else are there? Anybody? On any spot on the chart, there's people who want to buy and people that want to sell. But there's 2 other groups of people. Who are those people? Exactly, Marinus, thank you. People that have to buy and people that have to sell. Why would you have to buy? You're on the wrong side of the trade. You're short something, it breaks above a certain level, you go, oh no, I'm losing money, I'm losing it quickly, I have to get out, right? If people are hitting a stop loss and they have to get out, and I don't care how they've determined that stop loss based on some stupid, ignorant rule like taught in IBD of 7% loss you get out, or because it hit a number on the chart, or because it hit a dollar amount, whatever it is, when those people have to get out and they're getting in pain, do they care what M's earnings were on their last P&L statement, everybody? Do they care? Do they care where we are with the trade disputes? Do we care if the powers that be have sat down and agreed on anything? No, we don't care. Do we care if someone whispered that interest rates may not be lowered at the next meeting? Nobody cares about any of this stuff, right? There's areas on the chart where things have to happen. And by the way, this is not a day trading concept. This is a concept for all charts, all time frames. It applies on a weekly chart as much as a 5-minute chart. Okay? It applies to what some of you still call investing, which is fine. I call it long-term trading. Same example, one more example of this. Here's a daily chart of ACAT, and I threw this in there last minute because this is actually from today, but it just was a perfect chart to show you the example, right? What if you were long this right here? Let's say you went long in that green bar, or you went long yesterday. Are you an idiot? Everybody? Answer quickly so we can get through this. I do like some answers. Are you an idiot if you went long there? No, it's not a bad play. I mean, I don't know if I would have done it, but I could justify being long there. I certainly see a lot of people could be long there. There could even be institutions long there, right? It's not a bad thing. But what if you went long and you used that little entry and that thing is your stop? And what if you found out this morning you're opening down here? Reaction, anybody? You risk $500 and you're down 3,500. Well, I don't know if I feel like an idiot. I feel like an idiot when I do dumb things, Gary. And I certainly feel like an idiot. As a matter of fact, I typed idiot on the screen twice today. But I don't know if I feel like an idiot for that. I'd feel sad. But what you have to do is you have to get out. Right? Yeah, you'd like to get out of break even, Eric, right? You'd like to. But what happens if it opens and it just starts falling? And you're down $3,000, $4,000, $5,000, right? At some point you say, oh my gosh, I give up, right? And that's what this did today. So this again was a play for me today. This is my best play today. I made enough money today to buy dinner at Subway. It should have killed it today. I had I did two good trades that I mishandled, and but that's okay. It was a fun day for some reason. I really enjoyed it. I don't know why. But when see my point though, when you open down here, guess what? I know there are people that have to sell this. Have to. Yeah, coupon expires at 6, so I got to get over there, Jim. We have to finish this up by 6. Now, I don't want to. Oh, by the way, I was going to ask a second thing. Does this just apply to individuals? We always say we follow the big money, right? I really don't care if Mirnus and Eric are getting out of this play. We don't care about their 100 shares, no big deal. What about big money? Are they subject to this as well, or is big money immune to this? The concept that they have to do something. Or can they just sit back and say, oh, we're worth billions of dollars. We'll do whatever we want. Sound check quick, guys. How's the sound? Does it sound good? Sounds good? Good, good, good. If it's good for everybody, Jerry, okay, then it's got to be you then. All right. Everybody's good. Thank you, guys. Yeah, the big money actually is not immune to this at all. As a matter of fact, beyond any emotional response, they often have rules set up in their bylaws where they cannot hold a position that is down X amount of money. They're forced to exit. So you often have all this working for you. Now again, those of you that that know me, I'm not here trying to blow any smoke, and it's not always all that simple. I'm making it sound super simple, and it is. But what I'm trying to get across is that there is unquestionably going to be people that have to sell there, right? Unquestionably. The other side of the coin is there is always a balance. There are always people that want to buy for some reason or another, right? Whatever that is. Like, for example, there could have been people short from up here. Do you see where I'm pointing? What are they going to do the minute we gap down? What are they going to do the minute we gap down? They're going to cover, they're going to take their profits. And if you're short, the way you take profits is by buying. And it's buying is the same buying whether you're covering or short or going long. It doesn't matter. It's all a buy to the marketplace. So there's that. Does everybody fully understand what I said so far up to this point? Yes? Because if you do, I want to give you a first definition that'll be so simple now to understand. Okay. Everybody understand? Everybody out there? Including, I know there's a lot of you newer people out there tonight for whatever reason. Okay. Well, if you understand everything I said so far, here is how you make money, and here is what technical analysis is. It is the balance, it's understanding the balance between the total buyers and total sellers. That's all it is. That's all. Yeah, Jerry, it was just you we decided, okay? Everybody else was good. Something happened on your end. Nobody else had a problem. That's all the technical analysis is. See, like I just said, I don't want to oversimplify it because along with all those sellers, we know we're going to have some buyers, right? But that's what technical analysis is looking at a chart. I call it reading the language of charts and saying, okay, I don't know what's going to happen on this chart. By the way, how often do I look at a chart and say I don't know what's going to happen? Anybody who's taken classes from me, wait before you answer. Wait 15 seconds. For if you're newer, if you're new to me the last 2 months, how often do I look at a chart and say, I don't know what's going to happen? I'm just stupid. I don't know what's going on. How often do I say that? You pick out 100 random charts. How many times am I going to say I don't know what's going on? Yeah, about 97% of the time, it's not actually a made up number. The vast majority of the time, because we look for those special situations where I can look and say, hey, you know what? We're going to hit a lot more sellers here than buyers. We're going to hit right here a lot more sellers. Notice what happened on the 5-minute chart. People tried to buy this. That's maybe the short covering that came in. But then what happens? Whack, whack, whack. Power trend, whack. Got to be in that all day. Are we going to have more sellers than buyers? Back to this chart here. I know we're going to have more sellers than buyers, right? Hey, Jeff. And that's when you take actions, when you know that. And are you right all the time? No, of course you're not right all the time. It's getting big odds, though, in your favor, and it gives you the perfect time to act, how to handle when you're right, how to handle when they're wrong. All that is built into your strategy. Where am I? There I am. Okay? So let's now just quickly talk strategy versus speculation. I want to make sure we understand this as well, too. Long ago, strategy was unclear to me. I'm talking before super internet. So not real long ago, but back before, you could go and do your banking online, before you could go and readily look up tons of news online. Strategy was unclear. When news was scarce, you could consider superior intelligence and better knowledge an edge. Let me read that 3 times. When news was scarce, and I'm talking, 20 plus years ago, more than that now probably, 20 plus years ago. When news was scarce, you could consider superior intelligence and better knowledge an edge. Matter of fact, back then, you paid for knowledge. Is anybody here? Honestly, I have not, but is anybody here paid for knowledge? In other words, have you ever had a brokerage account where you were paying $200, $300, $400, $500 a trade? Anybody in here care to admit that? I mean, just admit your age, not admit what you did, because that's what everybody did. They were, right? Anybody done that? The group's getting younger and younger and younger. But that's what it was back then. It was you paid the big brokerage fee to the big, you got the big Goldman Sachs account with the $500 fee because you were paying for knowledge. They would send you the special insider newsletter that was going to tell you that they talked to Intel, and Intel doesn't think they're going to be able to get that same imported product, and their chip price is going to go up, blah, 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 and you got all this. And you know what? Back then, maybe that was your edge because that's all you had. That was a long time ago. Is news scarce today? Is it hard to find out news? If I want to go find out what Intel's last earnings were, what their projected earnings for next quarter are, what their projected earnings for 16 quarters from now, what their possible earnings were, what the CEO's wife likes to wear to cocktail parties. Yeah, I mean, you could find out anything you want about anything, and you know what? Everyone can. But yet, for some reason, so many people are still stuck in this world that they think they have superior knowledge. And this is why people don't trust technical analysis, right? Because they still have in the back of their head a legitimate thing. I want to be smart. I want to be good. I want to be better than everyone else. I want to figure this out. Damn it. Let me figure it out. But you can't do that today, folks. There's nothing to figure out. Because while you're figuring it out, so are 250 million other people, and they're all acting on it. And you are just one of those people. You don't have superior knowledge, right? Does that make sense? I don't want to harp on it too much because we have a lot more to go through. And I haven't even started teaching this strategy yet. And the goal of these slides for me is for a lot of you, remember what I started today was with the theme that I don't think learning technical analysis is hard. It's learning what to do with it. And part of learning what to do with it is to understand it well enough that you trust it and use it fully like you're supposed to. Not as a backup. Not if I hear the word confirming indicator one more time, I'm going to slap somebody silly. It is what you do. It does not confirm anything. It is what you do to make your decisions on. I know there's a lot of you that understand what I'm going to say, but like I think Singh does and Jim, I think a lot of you understand what I'm about to say. What I'm about to say is once you get it, once you're, when you're underneath the cloud, everything seems cloudy. But when you rise above the cloud and you get it, you look back, it's like, right? Don't you just say, man, I wish I just, like 5 years ago, I wish I had this knowledge now. I mean, you know what I mean? Isn't that right, some of you? It's just once you see the light, it's like, gosh, it's so simple. But it's such a hard wall to break through to understand how it works, kind of, There's nothing wrong with speculation. The last slide was technical, strategy. This slide is speculation. There's nothing wrong with having some fun. There's nothing wrong with playing out your gut, which a lot of people want to do. Do it with some fun money. Have a little baby account, whatever you think appropriate, and do what you do. If you think the new tech company can't compete with the others and it'll go out of business, go ahead and short it, right? I always said, I was joked around going back 15 years. I said Radio Shack could go out of business because they sell nothing but little springs and gizmos that nobody needs. Well, not that they don't need them, but every time I went to Radio Shack, I spent an average of 32 cents. So I always said short Radio Shack. It was kind of a joke, but that was always my gut. I always hated Buffalo Wild Wings. Why? because we have one by our house, and the kids want to go there. Every time I went there, I hated it. It was terrible service. Didn't like the food. I'm big on nachos. They have terrible nachos. So I always wanted short Buffalo Wild Wings. You want to do that? Go do it. But you know what? That's not how you make money, because your opinion really doesn't count. And you know what? You, meaning me and you, we don't know anything about this stuff. We don't know anything. Years ago, you may have had news that a lot of people didn't know. You know, it was easier to have super secret sensitive news. Today, you don't. You just don't have it. I hear people tell me that they have what they call insider information all the time. And you know what? It's not insider information. Just because you worked at a tech company, it doesn't mean that you have superior knowledge about what some chip's going to do for the future of technology, right? Oh, right. Yes, exactly. Well, you know, let me diverge and tell you a quick little story. And actually, I'm about to tell the same story in the tech world, but let me give you a story. A number of years ago, a long time ago, I was coaching somebody. We're on the phone, and newer person. And despite the fact that I'm coaching him and we're fairly well along, all of a sudden he says in an email before we said, I want to talk to you about Marvel. This is MVL, not Marvel Technology, but Marvel, the comic, the movie comic people, MVL. I don't know if they're still, I think they got bought by somebody. But you know what he wanted to talk about? He heard that the new Spider-Man movie was coming out and it was going to be a killer. Disney bought me, I thought so. Right? He heard that the new Spider-Man movie was coming out and it was going to be a killer and he wanted to go along Marvel. And Jay, I think this is right along the lines of what you just typed if I read your comment right? So he's thinking, well, he's got this great idea. He's going to go along Marvel because Spider-Man's coming out in a couple weeks and it's going to be a gangbuster. I mean, I just had to crack up. I had to yell at the guy. I mean, you know, like when the Spider-Man movie was probably begun 2 years ago, and people who, try to do this in a fundamental way, and this is why we can't do it, they send research teams to the movie site and look at previews and survey people and analyze and start to get a feel for how popular the movie is going to be, how much money is being spent. They're making buying decisions 18, 22 months ago, right? And you're coming out 2 weeks before the release and saying you think you know it's going to be a good movie. Do you guys relate to me what I'm saying about how stupid this is? How far behind the times are? I mean, you are simply going to be buying into a parade of sellers who bought 18 months ago. You just have to completely wipe those thoughts out of your mind. Unless you have special knowledge, really special knowledge, you're not smarter than the rest of the world. You hear about a great tech product and you love it. Do you buy the company's stock? Well, of course not. Why? For what I just explained with Marvell. If it has some great product coming out, guess what? It already has rallied probably for 18 months going into this release or whenever you're finding out about it, right? Let's say you're in the tech business. Let's say you really know phones or whatever it is coming out. This is the foldable Galaxy phone, which I think got squashed on release. But what if you are in the business and you really know phones? Then should you buy the stock? No, you don't know anything special. I mean, if you know something special, you're shaking because it's illegal and you're worried about what to do with it, right? Strategy. Now listen to this carefully. Strategy is the opposite approach. And I've never put these words on a screen till tonight. This is one of the slides I really like. Strategy is we take the opposite approach for strategy. I say, I am an idiot. I don't have a clue what's going on in the world. You like that first line? I think that's the best first line you can do to learn how to make money in the market. Bring home with anybody? Agree? Disagree? I'm an idiot for saying that? I'm an idiot. I don't even know what that stock does. I hate to tell you, I take long-term positions, guys, and I don't even know what the stock does. The only thing that I look at a chart, and if it's really choppy, I see if it's a biotech stock, but I don't even know what stock does sometimes. Yeah, I know Monster. I'm short AIG. I don't even know what they do for sure. I thought they were insurance, but I'm not sure they are. I really don't care. And above and beyond that, I don't want to know. And don't tell me. Here's what we do. I hope this slide is helpful to some of you. Let me watch all the smart people and see who wins the skirmishes, the battles, and the wars. Listen to this next line. I'll make my bet. I'm going to call it a bet whenever I want to, or not at all if I choose. Do you know what a huge advantage this is? I'm going to explain one more way. I love this next one also. Let's talk about a football game. The oysters are playing the cactuses. I don't want to use real names because I don't want to start a football debate, which some of you will do in the room because I know some of you. In the playoffs, but these are professional teams. You want to place a bet because the oysters are a great team and you heard the quarterback, that's QB is quarterback for some of you non-sports people, for the cactuses is mildly injured, but they're keeping quiet about it. The oysters are favored by 9 points, so you take the oysters minus 9. I don't even bet on, is that how you phrase that, somebody? Like you take the oysters minus 9, is that the way I would phrase that? That's right? Okay. Well, now we know who the gamblers are in the room. That's all I really wanted to see. So if I do this, and I'm a avid football fan, I read all of the magazines, I listen to ESPN 24/7. Is this a strategy or a speculation? Or what percentage of each? What percentage of each? If you're saying one or the other, what percentage? 100, 90, 10? Well, why is it 100% speculation? I mean, number one, I heard that the quarterback's going to be injured. Yeah, I need you guys to type something on the screen. I heard the quarterback's going to be injured. That's going to really hurt the cactuses. Hey, welcome. Welcome, Michael. I recognize your name. But I heard the quarterback's going to be injured. Doesn't that give me some odds? Oh, thank you, Eric. You're like my sidekick go-to guy. I love you. Whatever is out there in the world is reflected in the spread. The spread is based upon everybody who's betting and who they're betting on. In other words, the people taking the bets equalize everything. As a matter of fact, the people taking the bets are guaranteeing that this is a break-even deal to anybody stepping up to the plate. I don't care how good one team is, how bad the other team is, who's rumored to be injured, who just stepped on a thumbtack or whatever it is. It all works its way into the spread. In other words, the Oysters may be a better team, but I have to have them win by 10 points for me to win the bet, right? There are zero odds in this, period. What is the only way that I could have odds in this? What is the only way that I could have odds in this? I'll give you an example. I live next door to the quarterback for the Oysters, and he was out cutting his grass, and I just saw him chop his big toe off. I run out to my bookie, and I bet against the Oysters, right? That's the only way I have odds, right? True inside information. Nobody in the world knows, right? Now, let me give you a second example. The Oysters are playing the Cactuses in the playoffs. You don't really know either team. You don't even really like football. The spread in the game is locked in when the game starts, but you get to watch the first quarter, and then you get to bet on the second quarter, and they can't change the spread on you. Is that strategy or speculation? So it's Oysters plus 9, that's the spread. That's not going to change. You get to watch the first quarter, and then you get to bet on the second quarter only. Is that strategy or speculation? In other words, do you have a real edge in this example? Would you do that? Right, exactly. You have an edge because without anybody being able to change the parameters. So you get to see what's really happening. How bad is that quarterback really hurt? You get to learn all this stuff watching the first quarter and place your bet on the second quarter with nobody else able to change their bets. That would be a huge advantage. Why do I bring up such a stupid thing? Because you can't do that in football. Nobody lets you put a bet in the middle of the first quarter or whatever. Well, because in a sense, this is the stock market if you look at it properly, right? When playing a strategy in trading, in stocks, in Forex, and whatever, technically, you're doing like the second football example. You have an edge because you get to watch the actual battle, not listen to what others say about who should win. When speculating, you're doing the first football example. You have no edge because you're looking at everything from the same way that everyone else is. By the way, the spread, if you will, that we're talking about in football, where they're constantly weighing the people who think team A is going to win or team B is going to win, and constantly adjusting that point spread. What is that equivalent in stocks, in equities, in forex, in stocks and equities? Sorry, same thing. What is the equivalent of that? What is the analogy from a football spread to the market, any market at all? What is the analogy? Exactly, the price. The price. Do you see the pure analogy there? That no matter what's happening in a football game, whatever the spread is, whatever the quarterback's doing, people are placing their bets for team A, they're placing their bets for team B. The spread goes to 9, it goes to 8, something changes about the lineup, it goes to 7. Well, as buyers and sellers are battling, the price is moving up and down. It's constantly adjusting to the current sentiment of buyers and sellers, and that current sentiment of buyers and sellers is also looking forward an undeterminable possible infinite amount. In other words, there's price action built in that looks forward always, always. Nobody's buying the stock for what it's worth today. People who are buying the stock are buying it for what? For what it's going to be worth, right? You wouldn't go long a stock unless you thought it was going up in value. So they have this forward-looking view that we think, well, it's 22.20 today, but you know what? I think they're going to have better earnings. I think they're going to do this. And you know what? I don't know if they are or not. I don't know, and I really don't care. What I want to see is when everybody's done battling who says it's going higher, and everyone's done battling who says it's going lower, I want to see who's winning those battles. And that's what we do in understanding charts. Let me go back to my opening lines. I've said a lot of stuff and I'm about to teach you a strategy, so don't leave. You're getting the best part. I open up by saying that a lot of you may think I'm wacky, and a lot of you I may hit home with some of these comments. Where am I? Don't be afraid. Is it helpful at all? Wacky? And again, the goal is if you're not there already, and even if you're there in understanding technical analysis, I think this still may be helpful just for you to get exactly what we do and to keep reinforcing it. But if you're not there, you know, why would I learn tech? Well, it's not learning that's hard. It's applying it properly and understanding that this is how things work. And that's my goal, is to try and get it across to you in a way that makes some sense. Make sense? And I don't want to oversimplify it. Those of you that know me know I don't do that. It takes some understanding. It's not as simple as you say a battle won and battle lost. Well, what battle, when, where? Well, that's all what learning technical analysis is. That's exactly what I teach. What I teach, I call the language of charts. And it's understanding what battles do you look at, where, and those are called time frames. You know, different time frames. What is needed to win a battle? What is needed to lose a battle? If you win a battle on a smaller time frame, is that as important as losing a battle on a bigger time frame? All of these questions are what have to come together to give you a single moment in time when you look at a chart and you say, you know what, that's it. That's the moment where if it's going to not go higher, here's where I short it, or vice versa. Does that make sense, everybody? You're using all this information to arrive at that moment where you say, here's that 3 out of 100 times where I think I have a real edge. All you new people, does that make sense? In an abstract way, I grant you, I've not taught you anything you're going to make money with tomorrow, but I'm saying in an abstract way, does it make sense? Okay. Because that's what's important. You know, anybody can learn the little details. All right, and we're going to start learning a strategy. Conceptually. Anybody watch American Ninja Warriors? Anybody watch that show? I haven't seen it in a while. I used to like watching it. I don't know, sometimes we just forget to watch something, but cool show? Yeah, all right. So this is the wall, right? And for those of you who don't know, American Ninja Warriors, they get these great athletes and they come in and they run for time. And they go through these obstacles. There's, you know, they hop back and forth and climb up monkey bars and do all this stuff. And in almost every one, I don't watch it that much, so I'm not an expert at it, but in almost all of them, there's this wall. And what this person has to do is to run up this wall fast enough that they can grab the top here and go to the top level. Okay? And the wall, as far as I know, it always comes toward the end, not the very end, but toward the end. So in other words, you're already kind of tired when you get to the wall, right? We're learning a strategy here, by the way, in case you're wondering why we're talking about American Ninja Warriors, right? So here's the goal, right? The goal is that you run up the wall and boom, you get to hang on the top. That's what you're trying to do, okay? Now, for those of you that watch it, help me out here a little bit. Okay. If somebody, By the way, the only reason I know this and I'm using this is because I make these comments when I'm watching this. My wife hates me because I like kind of have to analyze everything. I'm like, I just can't watch it. I have to be a student of everything I do. So in my head, I keep statistics of, I know this sounds stupid, but that's just kind of what I do. So if somebody tries to run up this wall, listen carefully, and they don't make it, okay, one of two things happens. Some people go back to the very beginning. They get on the platform. They sit there. They bend over. Now they're running for time, so time is critical in this. But they'll go back and they'll regroup. They breathe. They'll put their hands between their head between their knees. They'll look up at the wall. They'll take a deep breath and they'll try it again. Try number two. Now, obviously, the people that make it usually make it the first time. That's the best. I think common sense would tell you if you don't make it the first time, try number two is lower odds, right? But if the person goes all the way back to this wall, to the step, and they regroup and bend over and take some breaths and then run up, they might make it, they might not. I don't really know what the odds are. Sometimes they make it, sometimes they don't. But here's what some other people do. After they fail in the first try, they run, you're forced to run down because you're running down a hill. They run down, they turn around as fast as they can right here somewhere, and they try to run right back up. What are the odds they're going to make it up there? What are the odds they're going to make it? Close to zero. I've only seen one, so 1 out of 50, right? Almost zero. We could call it zero. Why, Carmen? Because I'm glad you asked, because they've already run this entire course. They're tired when they get here. Their first try, they're as rested as they're going to be. They gave it everything they have and they couldn't do it. So now if they immediately turn around while they're still exhausted and try and do what they couldn't do 10 seconds ago when they weren't tired, the chance is almost zero, right? Make sense? So let's give you a test to see if you understand. Now here's your first. You don't get that, Carmen? Well, let me ask you this question, Carmen. I, I'm not sure how fast you are if you're walking or running, or maybe you want to think of your son or a friend or somebody you know if you're not fast. But if you had to race a marathon runner, would you rather race him when he got up in the morning, or would you rather race him after he ran 23 miles? It's all there is. If you're exhausted, you're going to have a harder, right? So that's all this is. If you've tried as hard as you can to make it up this, and you failed, well, 10 seconds later, there's almost zero chance that you're going to have more energy to make it up there. So let me give you the first test to see how well we understand this. You have to take a bet on whether this person is going to make it on their second try. The person who goes all the way back to this ledge and sits there and bends over and takes 10 seconds, catches their breath, and then tries for a second try, would you want to take that bet whether they're going to make it or not? Based on what I've told you, if you don't know, was that the bet you'd want to take? The person that goes back here, right? No, because I don't have any clue if they're going to make it. Sometimes they do, sometimes they don't. But would you rather take? I should have said rather. I'm sorry. I shouldn't have asked it as yes. No, I should have said which bet would you rather take? Would you rather take the bet from the person who goes back to here, or would you rather take the bet from the person who just ran down here, rested 5 seconds, and didn't rest at all, and turned right around, tried to run back up? I take the second bet because I know they're not going to make it, right? In other words, I can see what's happening in front of me, and I'll do it all the time. When the person does that, I'll say out loud, my wife yells at me, I'll go, no way. And she gets all mad because I'm not supposed to talk when I'm watching TV, but no way. And I'm right all the time because they can't do it. It's impossible. Let me give you another one. And it was pictured in the email. Let's try this from one other attack. And here's where we're going to tie this into trading a lot more right here. For those of you that are from a different era, if you don't like American Ninja Warriors, let's say this is the good old, remember the old movies where, they had to break down the castle door and all the soldiers would get this huge telephone pole, even though they didn't have telephone poles. I guess it was a log. They got this huge log. And and actually I was looking at this, I actually read about it a little bit. They would make this huge ram head. That's why they called it a ram. It was actually a ram head. And I think they made it at some point they made it out of steel, I guess, or something. Maybe in the older days, there's a big rock they tied to it, or sometimes I guess they just use the big pole. But if they come and they ram this door once, bam, and the door doesn't really budge, and then let's just say to keep it simple, they back up and try it again. What are the odds that they're going to break the door on the second attempt? Think about it a minute. What are the odds they're going to break it on the second? Kind of like the American Ninja Warrior thing, right? They tried the first time, it didn't work. And now I'm asking you, what are the odds they're going to be able to do it on the second try? What are the odds? And actually here the answer is a little trickier, because your answer should be a question. Eric, man, you are just too good. You shouldn't be answering, you should be asking me some questions. What questions would you want to know? Okay, Carmen, there's the first one. I want you to really give me some answers here. We're going to stop here until I get several answers from you. If you had to take the bet, try number 2, can we break the door down? What things would you want to know? And Carmen said 1. Well, did they budget it all the first time? What a great answer. Did we do any damage on the first? Right. So that's one category. The whole is the door cracking. That's all one. We got that. So did you do any damage? Odds should be improving if they did. Okay, right. So that's one thing. Okay, how thick the door is in general. Right. Right. Where are they hitting the door? Good. That's something else I'd like to know. Do they know the sweet spot to hit it? Are they hitting on the hinge side or the latch side, or that's all good. Well, what else would you like to know? Maybe how old the door was? Now, something amazingly interesting that I just noticed. How many tries at the last castle? Hey, Jay, there's really some good thinking. Statistically speaking, how many tries did this army need to get through? Okay, right. You know something interesting, though? All of you so far, there you go, Stephen, thank you. All of you so far have asked questions about the barrier they need to get through the door. Isn't there another issue involved? What's the door made of? Excellent, Richard, yes. But isn't there a second issue involved? It's not just the door that's part of the equation, right? How much of a running start did they have, right? If they're on some kind of a moat door, is it 10 feet long or 30 feet long, right? How about, right, that's momentum. How about how much does this pole weigh? How heavy is this head? How many soldiers are able to fit under and carry this pole? Are these all things we'd want to know also? Would you like to know the weight of the men? Would you like to know if we're in an equal employment environment and half of them are women? Would you like to know when they ate last? Or if they've eaten at all in the last 2 days since we're in a war? Would you like to know what time of day it is? In other words, 95-degree weather, 3 o'clock in the afternoon, or 60-degree weather, 6 o'clock in the morning, right? Too complicated. Well, my point is, you'll see the point in a minute, but in other words, all these questions come into being if you're trying to make a bet about that, right? So, what in the world are you talking about, you idiot, Paul? Well, that actually is one of my favorite strategies. It's a quasi-strategy, quasi-entry. It's called a retest and failure. You saw Stephen type that a while ago, but he's a seminar student, so don't give him too much credit because he should have known that. Good. Yeah. I love it, PF. Actually, that could be part of it. What's the motivation to get over there? Right. Right. Are we pillaging? Yeah, good question. All right. So what this amounts to me, though, is a strategy that is actually, there's 2 things I do all the time. There's 2 other things, a couple other things I like to do, but there's 2 favorite things for me. One of them's called the retest and failure pattern. Now, I know you've probably heard these words before, but believe me, you've never had it taught to you properly. I mean, not even close. This is the setup I had on Cisco a couple days ago. This is what I call a mattress. Don't worry about that. But what is this in my analogy with the castle? We're going to finish up in 5-10 minutes here. What is this analogy with my castle? In other words, we're going to gap down a little bit this next morning. We're going to be underneath here by a little bit. So what's my analogy, if you will? That's the door. That's the door. Very good. That's the door. Right. And what's going to happen is, now this is a 15-minute chart. Everybody see this here? On the day prior to the trade. And that is now this on the 5-minute chart. Everybody follow me? So in other words, That moment right there, the end of that day, that's that right here, whatever. Okay? So what happens the next day is we gap down a little bit and we come back, whack, whack. And I don't even need to ask this question because you have proven yourselves to be all fantastically smart, excellent attendees at this presentation. This is the battering ram, whack, whack, right? Retest and failure. Again, not just, whoops, I left it off there. Well, this is a trade I did. I left the numbers off, but I shorted this one right here. So if I'm going to short this, now, see, here's where I said I would teach you a strategy conceptually, right? But for me to just tell you that's a retest and failure, go out in the market and try it, you're going to be a little stuck finding the best one. But let me give you some additional information. We said that back at the castle, we cared about the thickness of the door, how old the door was, what it was made out of, right? What's the equivalent on this chart? I know it's that consolidation, but what are the questions about that consolidation? Actually, it's one question. There's one catch-all question that is the equivalent of what is the door made of, how thick is it, blah, 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 blah. What is that question? And it's a very important one. Right, I call this a mattress. I mean, don't worry about that term for all of you that are non-students. It's just, this is a thick consolidation. But what's the issue? If I want to, if I'm underneath this and I want to short a rally into this area, what do I care about in terms of that? Where I'm pointing right there. What's the issue? What's the equivalent of how thick is the door? The equivalent of what's the door made out of? How strong are the hinges? Well, the equivalent on a chart is how strong is that as a resistance area, right? Isn't that the question? Thank you, Eric. Geez, you're just, yeah, next presentation, I'm just going to give you the mic and let you take over, right? How significant is the resistance, right? Isn't that what I want to know? Isn't that what I want to know? If I want to short something underneath this roof, I want to know how strong that roof is. If I go banging my head into it, I want to make darn sure I drop out of it, right? How do you measure resistance? Well, that's a big topic. Those of you that hear the phrase, look left, you're in kindergarten class. Look left doesn't cut it for a trader. I'm sorry, but it doesn't. Have you all ever seen a support area that just prices went right through it like it wasn't there? Have you ever seen that before? You ever seen a resistance area? The prices went right through it like it wasn't even there? Right. See, this is where people get a bad gut for technical analysis because they see support and it doesn't hold. Right, Michael? And you go, well, this crap doesn't work. Support didn't work. But you don't know what support is. See, I teach 4 ways to measure support and resistance, and they're critical. Some support areas are literally meaningless. Don't even care about them. I'd short right above them. Doesn't make a darn bit of difference. Some are very significant. And as you will learn, this is a very significant one. And that's what I want to see. I want to see a resistance area that's kind of a maximum rating to me, right? Because that'll give me the least chance of ending up on the other side of this. Because if I end up on the other side of this, guess what? That's called a stop out. That's called I goofed. It's called I lost, right? And then the other questions all deal with how I'm attacking this price pattern. What launched this move into the resistance? What does the overall bigger time frame pattern look like? What time of day is it? How long has it been running to get to this area? What's the market doing? All these things are the questions that help determine the strength of my battering ram and the army that's holding it and banging against that door, right? These trades to me are the most, to me, these are the highest odds trades there are out there. Why don't I do every single trade like this? I try to. I don't always find them. You can't find them all the time. And then you have a decision. Do you do nothing for 2 days? Can't usually do that. You have to go to plan B. What's the other strategy you love? Do you see any of those? That's the decisions we all have to make when we're trading. Unfortunately, most traders make the decision to continue to push the button on lower and lower odd setups, especially when they don't even really know what the setups are. This Friday, I am teaching a half-day class that you all will be invited to. It is the first class of the seminar program. You are all invited to be there. The day after that is Saturday, where I begin the actual next cycle of the DTS seminar program. I like the last little line I put on there. Good trading is not an accident. You will never, ever regret learning this stuff. There's more to learn than you would ever think. Most people don't know what they don't know. It applied to me too, many, many years ago. I am not from the market. 20 years ago, I was not in the market. I didn't know what a stock was. I was very smart and figured I could figure things out, and I couldn't. And even if I could have, the speed increase to have some things taught to you. And what I learned back then is such a small fraction of what I teach now. You take that plus all the time I have in the trenches trading and all the time teaching people, you'll learn a lot teaching people. Email me if you have any questions or if there's anything I can do for you. So that's my presentation. I hope you guys enjoyed it. I really enjoyed this one. I don't know why. For some reason, certain things I try and get across, I felt like I got across in this, and I hope it's helpful to you to actually, for those of you that are already have a good education, that it improves you a little bit. I hope for some of you who are trying to do it on your own, that it gets you a step closer to doing that, or to realizing you can't do it, whatever the proper conclusion is. And for those of you that are new, I hope it starts to build you. I know a lot of you are just here kind of, kicking the tires and thinking, gee, I'd like to do this someday, sometime. I'm shocked, it wasn't until I opened ETS and could actually see where people come from sometimes. I'm just shocked sometimes. I mean, I'll have somebody that was like just on the list, like not even a member, just on the list for a year. And then they become a member one day. They sign up for the room 3 days later, and they take the seminar program 3 days later. I'm like, well, where did you come from? What are you doing? It's strange to me sometimes. Sometimes people just hang around until the time's right. And I know that's what a lot of you do. And that's why there's no pressure here. And I have, if you are new, when you go to, well, I gave you the website there, but make sure you click on the free stuff page on the website. I have a ton of information there for you that I freely give you because it's all the peripheral stuff. It doesn't replace the seminar program, but for those of you who want to try to learn on your own, you're not going to find any better information. I think the biggest key, number one, is first of all, committing. A lot of what I do on these free events is to get people to commit to the fact that technical analysis is where it's at and that it really works. And then the next thing is for people to really learn it properly. I know a lot of you have taken stuff somewhere. And yeah, I hear it, I already thought I learned this and blah, blah, blah. But, I've heard a lot of stuff that's taught. A lot of it just stops so short of being able to get you to make money. So much of it is designed just to give you a general knowledge of what's going on. And it stops short. And even with all the knowledge, you have to do the right things and practice right and do all the right stuff at the right time. So take care, guys.